Nice to be a bottoms-up guy, as we always say. Sarat, what do you like? And regardless of the macro backdrop, what are you buying?
So, Joe, what I'm looking for is, earnings resilience, companies that can provide earnings given kind of what's going on here with, every day it's like a seesaw. Where are we going? Are we cutting? Where we're growing? So we like healthcare. We like a lot of the pharmaceutical names in there, the Bristol Myers, the Glaxos of the world. Glaxo trades at a third of a discount to the pharma market. I like consumer staples, even though some of them are rich, but you know what your earnings you're going to get. Commodity prices are coming down, inputs are coming down, and the consumer spending. So you've got companies in there like a Haleon, a Nestle, Diageo, things that people will buy even when the environment is slowing down. So bottoms up, there are some good opportunities out there, but macro level, the market can pull everything down. And to Jim Cramer's point, there's a lot of negativity out there. So, as a glass half full guy, I kind of like that at times because nobody's actually looking at anything positive. It's all about, are we going to be, how low are we going to get in the next 2 quarters?
We keep saying once every 100 years. We're saying it more and more. Are things just, I don't understand. What's 2023 going to look like when it's all said and done, Sarat? Could we have sort of a year that's not quite as tumultuous overall? Or, people say, well, it can't be as bad as last year. It could be as bad. It could be worse, I guess. But we have a pandemic. The House has never been gridlocked like this in terms of a speaker. Every flooding or cold snap or warm snap is 100 years since the last one. What do you make of all that? Can we have a normal year, or are you scared?
I think we could have a normal year, Joe. I mean, a lot of this is built in. And if you really step back and you say, what is causing all this? It's caused too much demand, right? I'd rather have too much demand causing this than not enough demand. So at some point, and I know the Fed is, they're going to stick to kind of what they're saying, but at some point when the data comes and you're just starting to see companies lay off, you're also one of the things that people aren't really talking about is in the past, companies weren't laying off people because they're afraid of hiring people. Now that is starting to change. So I do think we have enough levers that if things really get bad and ugly, you can actually say, hey, we can slow down this destruction of demand. And I think you come out of this. Balance sheets are really strong in the corporate world. They have refinanced at really low rates. The consumer, even if they stop spending at the rate they're doing, they still have a strong balance sheet. Housing values are strong compared to kind of where they were even a decade ago. And look, right now, we don't know if there's a black swan, but you don't really see that in the market right now, given kind of what we went through 10 years ago. The great financial crisis, that was once in 100 years. All this that we're seeing right now, I think, we've got to go through it. And yes, earnings come down, but I think we get through it because we do have some positive tailwinds that can help companies. And it's got to be bottoms up. You can't just buy the market and say, I've got to be in these specific stocks because interest rates are not going to come down like they were back to 0 to 1%. And you've got to actually be selective and pick your spots.